renewed disagreement between the U.S. and China seemed to affect stocks on Thursday and Friday of last week, but it seems to have dissipated as we enter into this new week. Investors are focusing once again on earnings and also focusing on the behemoth tech stocks and what kind of results they will be reporting. And also, I think investors are preparing for the very deep decline in second quarter GDP that will be reported later this week. I think stocks are going up because actually the earnings forecasts are seeing gradual improvement. As we entered this reporting period, technology was expected to post an 11% year-on-year declines in second quarter earnings. Now that estimate has been cut in half, meaning a decline of about 5.5%. Also, revenues were expected to be flat for the second quarter, but are now expected to show a 4% rise. So for this second quarter resulting period, I think investors are feeling a little bit more optimistic and are still saying wait until 2021 for even better results. Bad news in that I think the Fed will tell us that they're still very concerned about the health of the economy, worried about what a relapse in the COVID-19 cases could be doing, and as a result, investors will look upon that as a reassurance that the Fed will maintain a very easy monetary policy, probably not end up announcing anything brand new, but at least indicate to investors that they will continue to be having the markets back and make sure that they keep rates low and continue to buy bonds. First off, yes, investors still are very worried about the spike in COVID cases, and those people buying into gold are probably assuming that a majority of investors are underestimating the impact. Second, we have interest rates that continue to fall, and low interest rates tend to be good for gold because gold pays no dividend and actually costs money to store. So the lower the cost, the more that you can keep. Third, the value of the dollar has been declining, and since this is a global asset that is priced in dollars, the lower the dollar, the higher the overall value. And then now that the Senate is likely to pass a $1 trillion stimulus package that actually the Democrats would like to be more like $2 trillion or $3 trillion, those deficit hawks are worried that the increase in the debt level will actually stir up inflation as we move forward, and gold tends to be a very good inflation hedge. The possibility that colder weather could increase the cases, plus we're still fighting the first go-round of COVID. The second go-round is what we have to worry about as we move into the fall and the winter. But I think also here investors are saying, yeah, but we'll probably have a virus vaccine by then, or very close to having one. And so maybe we do end up seeing the number of cases increase. However, soon we will be getting something that will allow us to fight it. Somebody asks me what's my biggest worry about my target. It's that it's too low. I think that instead of a 12-month target of 34.35, maybe that ends up being the original year-end target that I created back in December of 2019. The market continues to work its way higher. Does not mean we could not experience a decline of 5 to 10%, known as a pullback. Those happen quite frequently, but I don't think that we're going to be falling into a renewed bear market, mainly because of the fact that the Fed has our back and will continue to do whatever it takes. So I think that investors are going to look to the bull market of 1966, 1990, and 1982, when it took us 7 months, 4 months, and 3 months to get back to a new all-time high. Well, it's interesting. People do worry about market cap weighted indices because the larger the company, the greater the impact that they have on that index. Yet it's interesting that back in the financial crisis of 07 through 09, the equal weight 500 fell further than the cap weighted 500. But yes, we are looking at the top 10 stocks representing 30% of the weighting of the S&P 500, and a lot of those stocks are tech or communications related. So yes, there could be some concern if one or a majority of these behemoths end up giving back a lot of their gains. That could end up being a problem. But I think that would be something that would likely affect the entire market, not just those larger companies.